So Apple just unveiled the new iPhone 17 lineup, including a super thin model, which is the iPhone Air. The new phones feature several upgrades such as a new camera system, improved durability, and enhanced AI capabilities through the latest iOS 26 system. Now, despite the highly anticipated product launch, Apple stock is currently experiencing a pullback. This in itself seems to be a seldom news event, which is not uncommon for Apple stock, as many of its new features has already been leaked or widely rumored. Now, some analysts are pointing to investors' concerns about potential margin pressure on the company. So while Apple has held its prices relatively flat for its new devices, the company has been facing rising costs due to global tariffs. Now, what also contributed to the muted reaction from Wall Street is the lack of significant breakthrough innovation, particularly in the realm of AI. So Morgan Stanley just downgraded the trade desk and cut its price target from $80 per share to $50 per share. And as a result of this news, the stock was down more than 11%. With that said, in my most recent analysis of the trade desk, I did highlight the possibility of the stock coming back down to $45 per share. Take a listen. Current support for trade desk is going to be at $50 per share. If the stock cannot stay above this level, then look for a 7% pullback to $48. And if that level breaks, look for a further pullback to $45 per share. And from current price, we're looking at a decline of 13%. So looking at the current chart, you guys can see that my analysis was 100% accurate. Now, Jeffries thinks that there is a case for a 75 basis point rate cut. Take a listen.
Here today, Jeffrey's chief market strategist and CNBC contributor David Zervos is back. Always good to see you, Z. Welcome.
Great to be here.
What do you make of this inflation versus margin story in PPI today?
You know, we had a big surprise last time. A lot of it revised away, and then this big surprise to downside. It's a volatile number, and the big number's tomorrow. But it's great news. I think it feeds the narrative that many had hoped for, and it takes us back to kind of where Steve was going with thinking about these employment data, which if you look at the revisions, and I know you guys have talked about them a lot, it's 1.5 million jobs that have been revised away in 2024. It's an incredibly large number, and I think really pivots the story much more back to the employment side of the mandate, since that was such a big part of why they were sticking with these higher rates than many had thought reasonable and restrictive rates that we've been talking about.
Right. Does that mean a 50 is deserved?
I would certainly argue for that, and have for a while now. I think to get it is a political hurdle. You'll probably see dissents on both sides, whether we go 25 or 50. The question is how many dissents we get, from either side of this debate. That's going to be, I think, the more interesting part of this meeting.
Are you seriously thinking about 75 basis point cut next week?
I actually think there's a very cogent case for 75, but I just don't think politically it could get through. I don't think it'll even be on the docket.
But what is I mean, I get the case for cutting. I feel like that case, I've been on board for a long time, because inflation has not reared its head, and there's been signs of weakness in the jobs market. But the fact is, they've still missed their inflation target for the last few years, and they're not there yet. So what would cause them to cut 75?
I think the real question is back to the employment side. We've seen that the household survey has largely been the truth. The establishment survey has been what guided the Fed to this belief that it needs to stay restrictive, and that's been revised away. So now you're saying maximum employment, price stability. If you really feel comfortable that price stability is in the crosshairs, which I do believe today's data help with, and a lot of the data over the last year or so, if not more, have suggested that, it's time to focus a little bit more on the other side and get yourself back to neutral. Neutral is not even 75 basis points away. For me, it's
the
well
question
over
is, how
100
fast do you have to get to neutral? Don't you want to do a little to see how the market, especially with stocks at a record high, credit at spreads? I mean, it's really easy conditions. So what are you trying to achieve with a 75?
I guess what you're saying is that...
Now going into the rest of the video, here's some important levels to watch on AVGO, BROADCOM, Apple, ticker symbol AAPL, and the trade desk, ticker symbol TTD. Let's go ahead and start with Apple, ticker symbol AAPL. So current support for Apple is going to be at 224. If the stock cannot stay above this level, then look for a 3% pullback to 220.36. And if 220.36 failed to hold as support, then look for a further pullback to 215. And from current price, we're looking at a decline of 6%. Now to the upside, if Apple can stay above current support at 224, then look for a 1% continuation to 233. And if the stock can get above 233, then look for a run to 239. And from current price, we're looking at a return of over 4%. With that said, my overall target for Apple remains at 248. And from current price, we're looking at a return of over 8%. Now go ahead and take a look at BROADCOM, ticker symbol AVGO. So current support for BROADCOM is going to be at 362. If the stock cannot stay above this level, then I want you guys to look for a 3% pullback to 352. And if 352 failed to hold as support, then look for a further pullback to 340. And from current price, we're looking at a decline of 6%. Now to the upside, if BROADCOM can stay above current support at 362, then I want you guys to look for a 2% run back to 374. And if the stock can break above that level, then look for a further run to 384. And from current price, we're looking at a return of over 5%. With that said, I'm overall bearish on BROADCOM and I'm looking for a pullback to 247. Let's now go ahead and take a look at the trade desk, ticker symbol TTD. So current support for the trade desk is going to be at $45 per share. If the stock cannot stay above this level, then I want you guys to look for a 6% pullback to 43.48. And if 43.48 failed to hold as support, then look for a further pullback to 42.35. And from current price, we're looking at a decline of 8%. Now to the upside, if the stock can stay above current support at $45, then look for a 3% run back to $48. And if buyers can push the stock above $48, then look for a run to $50 per share. And from current price, we're looking at a return of over 7%. With that said, my overall target for the trade desk is going to be at $76 per share. And from current price, we're looking at a return of over 64%. Alright guys, if you like today's video, go ahead and leave a thumbs up. And if you're currently watching and you're not yet subscribed, do consider subscribing. As always, thanks for watching and I'll see you guys in the next one.